Hello everyone, welcome to the ichimokucharts.com daily analysis for the US dollar index for Monday, January the 4th, 2010. Well, a fairly large red body candle today, and that denotes that the sellers have made some solid net bearish progress on the day between the open and the close. Having said that, though, there is a very large shadow on the top of the candle, the body of the candle, and the bottom of the body of the candle. And that represents downside price rejection. That represents the bears coming in and selling this market off as it traded up above this 78 region, which we previously identified as a strong area of resistance, but also buying coming in as the market tried to trade down below this previous swing low. So there was some buying coming in there. The market failed to close down towards the lows here, and has closed in between the low and the midpoint level. That tells us that the bears have closed the market in control, but it is fairly weak control, and they lost some of the commitment that they had earlier in the day when the market was trading down below that swing low. The market is trading up above the cloud or the Kumo, though, which means that the market has an overall positive bias. And the market is also trading up above the Kijun Sen, which means that in the medium-term time frame, the market is positive. But at the moment, the market has actually closed down below the Tenkan Sen. That's probably not a good sign for this market. It probably foreshadows some continued short-term weakness in this market. The market has been trading up above the Tenkan Sen, which represents the trend in a very short time frame. It's been trading up above there for quite some time, for probably about 3 or so weeks. So having closed down below that region, it may be significant for this market, but we need to keep an eye on this area around this swing low, which is around this 77.40 region down to 77.25. We have drawn a trend line here and basically a trend channel, and there is potential for this market to continue trending down. If we look at the market based on peaks and troughs, we have had a new first time frame downtrend established and a second time frame downtrend established. The first time frame downtrend was established the day before today's trading, where the market made a lower high and a lower low. Today's trading was in bar chart terms an outside day, so the previous trend continues, but also the market took out the previous swing low. So we have a peak, a trough, a lower peak, and a lower trough set up here. So the market is trending down in the second time frame as well. The Kijun Sen here has turned flat, interestingly, and quite often we know that when the Kijun Sen turns flat, the market price action tends to be attracted back towards it, and that's what's happened here. It means that the market is trying to find equilibrium here. While the market was up above the Kijun Sen here, it denoted that the market had some good, solid momentum in that medium-term time frame and was trending up. But when that Kijun Sen turns flat, it's a relaxation in that previous trend, and the market will either congest or pull back. Usually there will be some sort of a pullback. So there is potential for this market to continue in this first and second term downtrend. So we need to keep an eye on this area here. If the market does close up above the 78 region with a solid close, then there is potential for the market to appreciate rather substantially. Just looking at this area here, this congestion, there is potential for us to call that a flag pattern. And here we have the prior trend running into the flag, and this is like a flagpole, and here we have the flag here. They tend to be continuation patterns, so there is potential for this market to break out up above the barrier here of the pattern and continue on. There is potential for the market to trade above this pattern to the same value of the previous trend running into it. So that was from roughly about 74.30 up to about 78.30. So there could be a substantial uptrend if the market does break out to the upside, but we don't want to preempt anything. The market is trading within that pattern. We do have a second time frame downtrend, so that second time frame downtrend overrides everything. Having said that, though, we are trading up above the cloud or the Kumo, which means the market is positive. So we're getting a lot of mixed signals in this market. We just need to wait for a breakout in either direction. There is potential for the breakout to the downside, and we need to watch areas of support on the way down.